welcome to Looking at the Markets with David Modell. Today I wanted to talk about the Death Cross, and the Golden Cross. Alright, now these are possible signs of a downtrend or an uptrend. Alright, so let's take a look. This is an example of a death cross. Alright, this is the daily candlestick chart, and I got this from stockcharts.com. And generally speaking, a death cross is when a short-term moving average crosses or breaks below a longer-term moving average. Alright, so the blue line here is the shorter-term 50-day simple moving average. Okay, this is a shorter-term moving average, and it's the 50-day simple moving average. That's the blue line. And the red line is the 200-day simple moving average, and that's a longer-term indicator. All right, and so this is a death cross. We've got the 50-day crossing below the 200-day simple moving average, and basically it's certainly not a perfect indicator. It does not always work. All right, but it's something to possibly alert you to. You might just consider exiting or getting out of your long position if you have one. Okay, so here's a perfect example. This is GLD, which is the gold ETF, and a death cross happened right here. The blue line broke below the red line, and if you had exited your long position here in GLD, you would have saved yourself from quite a bit of short-term, downward price action. And again, it doesn't always happen like that, but you could have saved yourself a lot of headaches and financial loss there, especially if you had call options, because you've got all these days of the price going down, and you're losing value of your call options due to time decay and things like that. So that's one example. Here's another example. This is TLT, which is the bond ETF, and here's a death cross, and this occurred right about here. And as you can see, after the death cross, the price went down, down, down in the short term. All right, so that would have been a good time to exit your long position. Here's another example, MXPT, and I don't know if you could see it, might be hard to see, but there's a death cross right here. The 50-day moving average crossed or broke below the 200-day moving average right here, and as you can see, if you had exited your long position, you would have saved yourself from a lot of downward price movement, a lot of financial loss there. And here's MHF, another death cross here, right there, and as you can see, if you had exited your position when the death cross occurred, you would have prevented a lot of financial loss there from here all the way down to here. Okay, so that's the death cross, and again, it's just something to consider. You might consider exiting your long position if you have one there. It's not perfect, and it does not always work. Now, what about the golden cross? Well, the golden cross is the opposite of the death cross. It's potentially good news. It's when the shorter term moving average breaks above the longer term moving average. More specifically, in this case, it's the 50-day simple moving average breaking or crossing above the 200-day simple moving average, like right here, the blue line crossing above the red line. This is Apple stock here, and if you had purchased Apple stock when there was a golden cross, and if you had held on in the short term, actually it didn't even take that long, a few weeks, and you would have made a nice profit there from here all the way up to here. And here's Starbucks, and right here is a golden cross with the blue line crossing above the red line, and if you had made a purchase right here, you would have done well. It wouldn't have taken very long at all to see a nice profit there. Here's MCOA, Marijuana Company of America. Here's a golden cross, the 50-day crossing above the 200-day simple moving average, and if you had made a purchase of this stock or call options right here, I think you would have done pretty well, especially in the short term. It went straight up pretty much. And then here's AMMJ, and here's a golden cross, and if you had purchased the stock right here, you would have done quite well. It went up and up and up quite a bit. would have made a nice profit there. And again, it's not a perfect indicator. I'm not telling you what to buy or when to sell, but these are examples of the price action going up after a golden cross, which oftentimes means that the trend is up and it's good news for the stock or the company. Okay, so if this was helpful, then please give this video a thumbs up on YouTube and leave comments, and also please subscribe to my YouTube channel so you can receive the latest updates on my financial educational videos. And if you want to contact me, you can email me anytime at davidmodell@gmail.com. Thank you so much. I appreciate it, and I'll talk to you soon.